So in the first 2 weeks of investing £100 every single day the stock market was open, things seemed incredibly smooth. But have things changed over the past week? You can see over the past week, things have slightly changed for the S&P 500, which was hovering around all-time highs for the past few weeks. Now, as you can see from this graph, over the past 5 days, down by nearly 2%. And on Halloween, things took a bit of a tumble. As you can see, the IUSA, the iShares Core S&P 500, down by 1% straight in the morning. Here's a screenshot. And the Invesco FTSE All World not too far behind, down by 0.91% straight in the morning. Month to date, the S&P 500 is now up by only 0.51%. And there of course are many reasons as to why the S&P 500 might be down. A lot to do with the American elections and the fact that, a lot of these AI companies which made up the Magnificent Seven, they have revealed just how expensive it is to maintain AI infrastructure, and naturally investors are worried about this cost and what it means for their investments. So like I said in my previous videos, at this point in time when the S&P 500 is hovering around all-time highs, a lot of investors get pretty nervous about, what if a market crash happens, and they might be holding on to a lot of cash. Well, in fact, last time I updated you guys, I had a lot more cash, and since then I have been investing a lot more as the markets have come down a little bit. Another thing to update you guys is that if you are with Trading 212, they have yet again increased their interest rates now to 5.15%. And this is correct at the time of filming. If they increase it again, then I guess, this is no longer up to date. So do bear in mind that it is a variable rate. In either case, I'm getting £5.95 in daily interest only now, compared to the £14.24 that I was getting with over £100,000 in cash. And as you can see, the last time I was paid this was on the 30th of October. So since then, as markets may have, tumbled down a little bit, I have been increasing the amount of investments I have, because in my personal opinion, I'd rather have my money invested into the stock market instead of cash. Even though £14 a day seems really nice, I think for myself anyway, in the future, I'll get more from the stock market rather than cash. Now, if you would like to sign up to Trading 212 and receive a free fractional share worth up to £100, you can always click the link in the description down below. Alternatively, if you've signed up to Trading 212 in the past 10 days and haven't received a free share, all you have to do is click the 3 horizontal line menu over here, scroll all the way down until you see the section use promo code, and enter the code JUBAIR and you should receive a free share. So how has my investment of £100 every single day that the stock market is open going? So as you can see, Trading 212 has made a few changes to the user interface. They no longer separate pies from, manual investments. You can do this by going into this section here and changing it, but let's just leave it at the default. You can see this is my pie, £100 every day. And just by looking at the overview here, you can see that my investment of £100 every day for 3 weeks that the stock market is open is now worth £1,486.03. Remember, the stock market opens Monday to Friday, so for 3 weeks that is 15 days. I've deposited £1,500, and since then I have an unrealized loss of 0.93%, and that is a loss of £13.97. I also have been investing £10 every single day into the S&P 500, which I will show you in a bit. So you can see most of the loss has been happening over the past week, with the Invesco FTSE All World down by nearly 1%. Now, like I said in my previous video, I have chosen Invesco for no particular reason, just to show you that, I am not a financial advisor. I'm never going to give you stock advice, ETF advice. I can just make you aware of the different types of index funds there are. And I don't think there are humongous differences between, something like iShares, Vanguard, etc., etc. You should find out what the holdings are for yourself. So as you can see, the 1st of November was the worst. The index was down by 2%. And this seems like a blip in the market, not anything that, lasted. And then you can see later on, it kind of recovered. So I would not actually consider this massive dip here. In any case, I now hold 283.43 shares in the FWRG, the Invesco FTSE All World. And as you can see, that is a loss of £13.97 unrealized. If you had told me before the experiment how this would have gone, I would have thought that in the first week, we would have been down, and I could have been expecting anything between a 1 and a 6%, reduction in the short term as an unrealized loss. But I'm actually pretty surprised to see we are only down by 0.93%. Remember, in the short term, the stock markets are always very volatile. There's no telling where the stock market will go. Sometimes it goes up by 10%, sometimes it goes down by 20%. There's no real way of knowing which way it's going to go. That's why, if you do want to generate long-term wealth, you have to think about how the stock market behaves. And, if you have to use your money in the short term as an emergency fund or something like that, the stock market might not be your best option. So over the past week, let's go through every single day. You can see on Monday, at the end of day 10, essentially, we were down by £1.67. Monday morning was not too bad. As you can see, I deposited another £100. My total rate of return, for some reason, I'm not sure why Trading 212 gets this wrong, but it says 26 pence. As you can see, at the end of Monday, I had £1,098. Here is Tuesday. Things were looking really good on Tuesday when the markets opened at 10 a.m. You can see return of £1.51. And here we are throughout Tuesday, not any big losses here. As you can see, here we are on Wednesday the 30th. You can see, yeah, we have a bit of a loss. Total return negative 2.23%. So at Wednesday closing, we were down, quite a bit by £3.74. But the big dip here happened on Thursday, the 31st of October, 9 a.m. As you can see, we were down by 1.2%. And you can see things started to slightly recover. On Friday, we can see the rate of return was only negative 0.9%. And of course, a lot of other fluctuations that, happen in the stock market in the short term. So alongside doing the £100 every single day into the FTSE All World, I also did £10 every single day into the S&P 500. So if you want to compare, I guess you can compare the percentage numbers. We can see at the end of week 3, so this is 15 days of depositing £10 every single day, 3 weeks again, we are down by only 0.89%, and that is a loss of £1.34. So I guess if we times that by 10 to make it £100 per day, that will be down by £13.40. So again, I would say very comparable to the FTSE All World that we have been doing, but the S&P 500 does edge out the FTSE All World by a bit. Here we can see day by day what has been happening. Basically, at the beginning of Monday, we had £100 deposited, and then it went slightly down this week. Tuesday, we can see rate of return 0.2%. Wednesday, rate of return 0.3%. Again, lots of fluctuation. On 30th of October, Wednesday at 3 p.m, we were basically breaking even, and then a big dip happened. On the 31st, so a Halloween dip did happen. We were down by over 1.3%. And then of course things, fluctuated quite a bit. At one point down by 1.5%. And then right now we are only down by 1.1%. But if we go to here, we can see the actual rate of return. If we go here, we'll see how many shares we have. So over the past week, the IUSA has seemingly dropped higher than the FWRG, down by 1.17%. Currently, we have 3.35 shares, down by £1.34, or unrealized 0.89%. So make sure to check out some of my other videos, and I will see you in the next video.